Welcome back, everyone. Today, we have a very special guest, Alan Au, and I have known each other for a couple years at this point. But today, he has finally agreed to come onto our show, and his specialty is specifically as a finance controller. He's worked with many founders within the Web3 world, and in an area that I have very little knowledge on. So I'm really excited to chat with him today. And then let's kick off this, vibe session, fireside chat. Alan, how are you doing today? Thank you for coming.
Thank you for having me. And I am doing quite well. It's Friday at the time of this recording, so TGIF, and I definitely carry the TGIF energy right now.
I see.
I'm sure we're all looking forward to it. Even with the post-pandemic remote world, for some reason I can't shake off the it's Friday,
Yeah.
but that's all right. No, actually, I just wanted to add to the intro you gave me, and I appreciate that spotlight. I come from a corporate background. Used to work at one of them big four companies. And then I left to kind of start my own thing. Did several projects, which then formed into one company I created to help service different Web3 projects. It could be NFTs, blockchain. This is a time like 2021 to 2023. And then afterwards, I found an offer I couldn't refuse. So I closed down the shop and joined a company as their financial controller, taking in a lot of knowledge of owning a business, a lot of knowledge of building relationships inside and outside, a lot of knowledge of the industry itself, and creating an opportunity and career for myself here.
Nice. I can't wait to hear more. I'm wondering, so is the current place that you're at, would you consider them a startup?
I would consider it a startup. I work at a company that in 2022 was valued at 2 billion. And now that it's 2025, one could expect that that valuation has increased significantly. This startup has since launched a couple of great products on the market, and it's been a time of my life.
Nice. Let's roll it back. I don't know. We don't have to go past a decade back, but I'm just curious on how did you get into Web3? But even before that, you mentioned that you come from a very corporate big four world. I'm sure that is very different as well. And I know at one point you also took a very short career break, and I follow your newsletter. So tell us about that journey.
Uh, well, this is going to be a funny answer. How I got involved in Web3 is a very, very unprofessional answer.
Okay. Okay.
But I will say it anyway because it's part of the fun. For the lack of better words, I basically decided to go on LinkedIn one day and make fun of Web3.
Hmm.
I come from a corporate background that entails a lot of skepticism on newer technologies, especially cryptocurrencies. It was a traditional big four public accounting role, right? Where even though I did do a lot of things in that space, I still looked at new industries, emerging industries, something like cryptocurrencies back when was it Dogecoin got created as this is a scam, right? This has to be a scam. And it's funny. I had some idea what it is, and I understood the technology. I just did not understand the market valuation of it or anything about it. And that ignorance is on me. So I actually find myself at a hardware store, bought I saw one of those coveted graphic cards that people use to get into crypto, bought it thinking I would play video games on it, but ultimately realized this is very, very expensive and I need to gaslight myself into some kind of success here. So I got into crypto mining and then
Interesting.
started to post my learnings about crypto mining, saying this is what you do. I don't know why you do it. There's a heater. I even joked I have a $2,000 heater in my living room that's running 24/7, and it's mining apparently these cryptocurrencies. I still don't understand the value proposition of this, but I guess I have a heater and I'm saving on heating costs here. I started to post online about it, and let me tell you, that invited a lot of conversation, a lot of questions and curiosities, but also a lot of people who are also as confused as me. And I would say maybe a couple weeks in or a couple months in, someone had referred my personality and newsletter to someone that they knew said, "Hey, you know about Web3 projects." I love that statement, especially when I was being an amateur and also making fun of the entire thing and thinking it was kind of a fraud and scam. And I said, I mean, I guess I'm happy to talk to this person. I go on, get on the call, I talk to these amazing founders, and I didn't really think much of it. They just asked for general advice, general direction, and I just gave them free advice. And for I didn't really think much of it, actually. 1 month later, they came back to me and said, "Hey, we kind of did a lot of what you just said, so can you help us more?" And that right there realized, okay, maybe I do know something about Web3, at least from structuring businesses and operations. And I said, I wouldn't work with them full time, but from a part time basis or at least consulting basis, I can support them. That right there was how I professionally got started seriously into Web3. Because after that first encounter, I thought, huh, I guess I could work with different founders and
So
different
have you
projects.
so have you changed your tune? Are you now a Web3 connoisseur, advocate, knowledge expert, all of the
I
above?
am after working with the mechanics and understanding of it, I have to take a step back. I'm a connoisseur of blockchain technologies. The
Okay.
blockchain itself, it's so ambiguous and
Mhm.
that could be construed to as many things. I am a connoisseur of certain blockchain use cases as well as certain developments. Back then, I think I didn't understand NFTs as much, but I understood that the software being made to generate these NFTs and to track them and this idea of, on-chain permanence was a very valuable proposition. I just wasn't seeing, you know, something fancy or shiny that made sense here. It only took maybe a year or two down the road for me to find opportunities and talk to people that made me almost go crazy on this concept of Web3 and blockchain to the point where, yes, I can see how this technology should be used to basically change financial industries and how we do financial transactions online. It only took me getting into the weeds and really understanding. I realized there's so much noise. There was so much noise for me to demystify to get to where I was, to where I am today.
And how did you weed out the noise?
It turns out time will let you know what you need to weed out. Crypto or blockchain is a market that has so many downturns. It's also a market that has so many upturns. In 1 year, in 2022, it had three crashes. And it turns out if you work or are involved in the space long enough to weather these crashes, you'll understand which projects and technologies have great fundamental use cases and which ones were just a cash grab or what we call a rug pull or a scam. Right. And I think that's kind of the beauty of when you enter a space. It's also when the market does go bad, what do you do? And you hope you have enough capital that you can weather the market so that when the market is up again, you are able to reap in on those opportunities. And I was able to do that twice.
Do you feel like that's universally true? Obviously, you made your transition to the Web3 space later in your professional career, but I'd almost argue that that same kind of notion, whether it's grit by the founders or the product has, enough legs to weather the storm. Um, do you feel like what you've seen historically as an operator, that to be universally true?
Working with different business types, especially back in corporate, I think every market has an up and down, right? It's pretty cyclical. When a market goes down, it just means that the market is either very saturated or there's a lot of noise and it needs a natural mechanism to kind of compress and if not call or trim the fat, as they would say. You can spot those trends in almost any industry. And if you happen to join in when the industry is like on a hype train, basically, you're going to see the sexy, fancy things that are catching people's attention. But there's a good chance that those things are also not fundamentally changing the industry or could only last that cycle. But that by the time that the next cycle happens, it's gone. No one talks about them, right? I think was it NFT technologies were one such type. where they were really big between 2019 to 2022. And then it collapsed. And now we don't really hear so much about NFT collections. But of the NFT collections you do hear today that have survived that turmoil, they are remarkable.
Who has
Right?
survived? I'll be honest
You
with
would
you.
be
I'm
NFT
I'm
technology.
curious.
So NFTs is a technology, right? And a lot of brands had basically marketed their cosmetics or their products as NFTs. I would say after the downturn, they kind of shifted into a different position. Where you're seeing NFTs used now is in the gaming marketplaces.
Mhm.
This
Yep.
idea that you can have actual digital assets that are powered by NFT technologies.
Or a gun or
Yeah, a
something
permanent
like
level
that.
permanence. What
Yeah.
is remarkable about it is I think you're seeing a lot of projects create new business models that allow them access to secondary markets for their product, for their IP, for the games that they make. And that right there is a very remarkable use case. We didn't that, that was only theorized to be possible. Now it's becoming very possible. I can't imagine you'll see something that markets itself as NFT and that's it. It's going to be, hey, here's this great value prop product, cosmetic good, whatever. And we're able to deliver all these experiences to you using, in part, NFT technologies. So, in many ways, that original shiny thing from 2019 and 22 just changed its marketing, changed positions, and got very focused in on the problem they wanted to solve or needed to solve, right? I can even tell you that there are some chains that by default, every token on that chain is non fungible or NFT, right? It's almost like a so ubiquitous that you don't even consider the fact that it is. And that's kind of the beauty about a shift in the market, right?
Right. Yeah, so it does sound like you do agree that there are these ebbs and flows that are cyclical from a business perspective, but also the infancy to the maturity of stages of different products or businesses or markets in general. AI for one, Web3 for another. We saw the early days of Web3 being snatch and grab, how much market share can I get into, what's the new hottest thing, but seemingly as the market becomes more mature, it seems like so do the products and what you're going to market and leveraging the true power of the underlying technology to the best of its ability to actually create, some improvement, innovation in the actual marketplace.
Yeah. I think everything starts, I think you see technologies build in private or in silence or technologies that are not understood. I'd say blockchain was not really understood, Bitcoin, not really understood until it has that one viral moment. It goes viral and
Is it
probably
better
to the
understood
dismay.
now?
I'd say it's better understood and or at least it's given the space to be understood. I think until it went viral, everyone just said, okay, you're about to pay 10,000 to 1,000 internet money to buy a pizza. Right. So they didn't understand it because at that time it was brand new. It was unknown until it had that one viral hit or multiple viral hits for whatever it is. To the dismay of some of the engineers, I'm sure they were like, I didn't intend for it to look like animated pictures online that people save, but okay, here we are. That just happens to be something that the viral community or the marketing community picked up on. I'd say after those viral hits, people start to say, "Hey, this is actually it has amazing potential. Let me take what this is and give it a different spin, go to a different angle." I think in blockchain technologies, blockchains when they first were even conceptualized and deployed more than a decade ago was a concept that all of us would say don't really understand it unless you were one of those folks that were thinking of the future. I would say maybe 5 years ago, which is 2020, even or maybe before that, 2017, there was a bit, there was a great resurgence and focus on Bitcoin and Ethereum back then. And then I would say within the last 2 years or maybe 4 years, actually, still has, and blockchain technologies have dominated the future of finance. I'm not going to use any big terms here. I'm just saying, in terms of mind share. I remember like 10 years ago, in 2015, you'd hear a little bit about Bitcoin and the idea of
Mhm.
Ethereum, but that was it.
Yeah.
You and I couldn't really access it. You couldn't really, it wasn't that easy to buy or to hold. You'd get scared into cybersecurity issues of being hacked. Then by 2019, you'd have funny meme coins came up
Mhm.
that anyone could just grab. The Staples Center became the crypto.com arena, which I'm so dismayed about. I liked it in Staples. You started to hear it, you started to see it pollinate everywhere. And the energy it takes to even get in on it, especially as an individual consumer, was getting a lot easier. The barrier entry was so much easier. Right now, you can actually just, I suppose, open a centralized exchange account and just buy crypto now. I guess you can do
Mhm,
it through
mhm.
some of your traditional banking apps. Well, not really traditional, but more like the fintech one, like Robinhood.
Mhm.
So here we are today, and it's been a ride. To what I think one of the things I want to put it back to the whole founder aspect. What's fun here is working with founders who see the trend versus working with founders who are getting lost or caught in these market trends, right? And I worked with great folks that they have very, very niche products that are solving a problem for that era. The problem that they face is the crypto market changes on a dime very quickly, such that whatever product that they did have or whatever concept of income coming in changes rapidly for them. There's so much uncertainty for them, so much ambiguity. One day you're up because the token that you sold it on is very, very pricey. The week later, it cut in half. It's kind of like for them, they're watching their stock prices drop in half and do they panic, right? And it's kind of like, I think a good role I like to serve is a lot of these market downturns and upturns are temporary. Don't judge your business based on those factors. Instead, just get enough cash to out survive the market and keep on building. Because right now, the blockchain industry as a whole, maybe until this year, it's still trying to find its feet, right? It's still trying to find great retail and institutional use cases. But
Okay.
that moment is coming incredibly soon, if not is already here. And had those founders, if you were like in 2021, trying to think, what does 2025 look like? You would probably not be able to guess what 2025 look like. You would not guess what the current state of affairs are. You couldn't. In fact, if I asked them right now, what does 2030 look like? It'd be very hard to predict what it's going to be. So that leaves you with the only choice left, which is what can I do today to survive into that future? What are the things I can do to, I guess, get enough capital, get enough cash such that I can continue building and taking this remarkable technology and creating even better versions of the internet.
Okay, so my question was regarding because you're saying, for founders in Web3, especially in such a what I'm understanding, the blockchain industry is volatile right now. Is my understanding correct, or are we in kind of a downtrend for blockchain?
It does feel like it's a downtrend. Now, blockchain tech, at least it's there are a lot of cryptocurrencies in blockchain and a lot of alternative coins, but for the most part, it feels like a downtrend because it's now mirroring or following. We call it the capital market. One could call it the stock market.
Yeah.
Okay, stock goes down. Turns out Bitcoin price kind of goes down, which is odd. But sometimes stock go down, Bitcoin price goes up. Now it does feel like that, but I also have to tell people to kind of step back. I'm going to rest some prices. I didn't want to do this, but I'm going to do it anyway. The price of Bitcoin right now is over 80K, and it's coming down from 100K in January. Someone who is new to this will say that's bad. Me over here remembered when Bitcoin was 300 bucks, if not, could be cheaper, and I didn't buy because I didn't know what it would do. Me over here realized last year, 1 year ago, Bitcoin was 50 to 60K, I think, somewhere around that end. Me over here, back when in 2022, saw Bitcoin go from 60K to 9K, right? And so if you take a step back on the time horizon, you realize, I guess it's good. I guess it's bad. I guess it's good. I guess it's bad. If you zoom in out enough, Is it good? Is it bad? Is it good? Is it bad? It doesn't really matter at this point.
So for Web3 founders, is the product market fit, is that heavily tied to how well these cryptos are performing?
I'd say a if a product founder built a product today when a token price, these tokens are very high valued. And it's also in a period where the price of that token, because it's volatile, goes up in value, they're going to find a lot of noise. They're going to find that it's going to be very hard for them to figure out why did people buy their product or their thing outside of the craze, the
Hmm.
hype trend, the moment. It's going to be very hard unless they're able to price such that volatility is not an issue to them. What do I mean by that? There's a new technology, not technology, but I guess new class of cryptocurrencies, relatively speaking, it's not really that new, that kind of solves the volatility problem. We refer to it as the stable coin.
Mhm.
So instead of
Yeah.
buying with a cryptocurrency that can be $1 today, $100 tomorrow, 1,000 next, here's something that's supposed to be worth $1, it's only worth $8. If they built products to cater to these stable coins, it's a lot less noise they must contend with. Now people are using them for the specific use case of that, right? Which is great. The other end is if they build products during a downturn that remarkably get more users or are attracting enough users to interact with their product, right? Even when the prices are falling, but they're still transacting those cryptocurrencies or units, they're finding that they have a lot of rich data sets there. You can tell a lot about the customer or your people who are using it, right? Because now you can ignore the hype train. People are here in the downturn, so to speak, because there's a belief or they see the value proposition of the product that's being made.
So you
And
have a
that,
better chance of finding your true users
yeah,
in a down
Fu-
market.
yeah. From a financial lens, this is my financial plug here. It's the problem here is people look at I'm gonna say fiat, okay, traditional dollars, and think, wow, I made a lot of money off this product and these users. They'll say because of the token price being high. I would say it's very misleading to use your dollars as a way to figure out or revenue as a way to figure out if your product is doing well or not. It's my job here to say don't rely on the revenue or the dollars. Instead, rely on other metrics like what's the nominal unit or the actual direct unit of cryptocurrency exchanged for your product? What were the amount of transactions or the wallets, as we say, or the users involved in that? Look at those metrics over, wow, my top of the line revenue is going higher and higher and higher, right? For me to change what I just said, or at least simplify my explanation, products that are selling for cryptocurrency need to be looked at and compared at using cryptocurrency metrics. You can't use financial dollar metric. It won't make any sense. You just look at the dollars and say, is it going up or down? Is it going up or down? I don't understand.
So where does data live within the Web3 space? Like, is it a
Gosh,
one for one parity? How as a founder do you feel confident that that you're tracking the right metrics?
that's a great question. This is gonna be this is gonna be one of them really stupid ones where I say it's on the chain, but it also is subjective to which chain you're using. So I like to use an analogy. All blockchains, every blockchain that you see, or every cryptocurrency, whether it's Ethereum, Bitcoin, whatever, Solana, is its own city. I just imagine it as its own city. Each city has its own rules on where its data is stored, how the data is stored, and what you can do with the data, literally, like what kind of transactions you can make and the
Also
frequency
imagine
of
like
that,
what you even have access to.
and what you could have access to, what is supported. Okay, I'm sure if you guys have driven or have visited different cities, either in Canada, United States, or anywhere in the world, you notice that, wow, every city is remarkably different on how they handle people, how they handle roads, and how they handle public infrastructure. There are some chains out there that they're so nascent or so new that They don't have freeways. They barely have a stoplight, maybe, right? And you could tell that maybe they're either growing or they haven't considered it yet. And then there are some cities where they're very car centric. Wow, this is great, to the dismay of anyone who loves public transit. And then there are some cities that are very public transit friendly, but they don't really take cars. It depends on that chain. For the most part, all chains at least share a base trait that there is transactional data on the chain, accessible, public at any time. It's just the richness and the depth of that data can vary chain to chain, right? And if the data, and so one of the things the product builder must consider in this space is what chain are they building on that allows them to build the product they want to build. So let me put that as an analogy. If you, where do you open your business such that I don't have to worry about the roads and the traffic being maintained so that they can come to my business? All I need to do is open the store and focus on the store, not the actual what's in front of my store. That's where we're at right now in the space. Different chains have different incentives, different infrastructure, such that you as a product builder have to consider: is that worth it? Do I want to build the house or the commercial my business, and then also have to deal with road construction all the time, for lack of a better word? Or you know that the road is too narrow and that for them to expand it, it's going to take a long time. That's basically what has to happen.
Yeah. So that's rather universal within the product space, different kind of, characteristics or restrictions that you have to consider when you're building something. So that makes a lot of sense. Can we take a quick detour? I want to, I've realized as we're getting deeper into this conversation, there could be people listening right now that are like, what the F is X, Y, or Z? So I have so many really great, interesting, and I'm sure UA does now too, around what should a founder dig into. Now that I'm getting a little bit more insight, like the Web3 space is sounding far more intriguing. The analogies that you're using kind of break it down a little bit easier. But let's take a step back. Can you describe for folks listening in whatever simplistic terms you want to use what blockchain is, maybe what the difference between Web3 and crypto, if not fiat, any of these types of, high level terms that you feel like are most important to understand? Or maybe even more importantly, what do you feel like the public should know more so that they're more educated? And then that brings more openness to kind of this Wizard of Oz esque kind of.
And I love that you mentioned that. And I do apologize on some of my technical language because 4 years
No,
ago,
it's great.
I was making fun of the person just like me. And then I now got caught up in the lingo. But I still hopefully retain some level of being able to demystify that. I say when you look as a new learner or new observer in this space, you're going to hear so many phrases like I just said. About 90% of them, as I've come to realize, are very engineering speak or techie speak. They were made to attract by developers to attract other software engineers. So they're speaking a language that attracts each other. If you're not a software engineer, you're going to be sitting right there in the room and asking, well, what just happened? I'd say at a base, the core language, or at least the core words to be known, are what is fiat and what is crypto. Those are the two things. Fiat is just traditional money, traditional dollars, whether it's the Canadian dollar, Japanese yen, US dollar. Crypto is any of these cryptocurrencies, such as Bitcoin, all the way to Ethereum, Solana, and so forth. Those are the base things. I would say do not get caught up in trying to understand the 100 to thousands to tens of thousands cryptocurrencies out there. It would really don't get caught up in them. Don't try to learn every single one of them. That's like trying to say, hey, here's a map of Europe. Learn every country, every city. Maybe one day you'll go there. No, I don't learn about it that way. It's not going to work. It's kind of like you don't look at the stock market and say, I'm going to learn every stock. It's not going to work that way. Instead, I think the easiest thing to do is just look at the top 5 projects or 5 currencies, maybe the top one, and try your best to understand it. Someone's going to say, go read a white paper. You could do that if you're of the academic mindset, or you can go to the millions of YouTube channels that have created great analogies and simplifications of what that is. That also helps a lot. Insofar as looking at it outside of a technology, that's actually the question now, isn't it? I think a lot of literature you see about crypto, blockchain is very technology heavy. What can the technology do? What's the unlimited potential? If you sidebar those thoughts for a moment and ask the other question, which is, okay, so what's the business, or how does this help me regularly? That is the area that cryptocurrencies and blockchain technologies are trying to get to and answer. And they're trying to answer in fast. That right there is what you have to look at when you assess something and ask, well, what does it do and what can it do? And also recognize that it hasn't found mass product market fit or consumer market fit here. And that right there is also the entrepreneurial opportunity as a founder, which is how do we take this technology that's rich of data, that's basically an infrastructure technology, and build products that consumers would want, that businesses would want. That's what's happening right now. This also be hilarious if this is the chat that evangelicalized you into this space. This would be
Well,
very
so
hilarious.
for me, I actually have a pretty early adoption into crypto. I spent about a year, actually took a weird detour in my professional career where I worked at a family office. For those of you out there who don't know what that is, it's effectively a micro hedge fund. But one of the things that the family office did was do small angel investment rounds. So I kind of got in early when blockchain was still this kind of scarlet letter word, and Bitcoin was really kind of the only thing people were talking about. And the company that we were investing in was in the cannabis space. So that's where I started getting into you really just getting excited about what blockchain is and this way in which you can then disrupt the financial system and give access to people who could need it. And this in particular would
Oh,
allow companies that, from a federal standpoint, are blocked from opening up banks and passing funds from state to state, where if they were on this particular blockchain or using this particular token, they could do a one-for-one exchange of their dollar and be able to do business in different states and
so like
have that way.
one of the most beautiful things I found about the blockchain industry when I look at it as not as a techie person, but as a either a business person or a citizen of the world is the fact that there is a data set online that anyone has access to, that if even one data center were to go down, it still operates and functions. This phrase blockchain is actually, they say, distributed ledger. The very simple analogy is imagine Google Sheets with a million people on it, and it's permanent, and you can see everyone's entry and data set forever. You cannot delete. All you can do is add information or amend it, right? And that even if my laptop were to get destroyed, that thing can still persist and live on,
No
right?
one owns it, right? That's the
And,
other.
and if no one directly owns it, right? There's no central company that can shut off your access. That's actually the most important thing right there. It's this idea that in blockchain technology, there isn't a central entity or central set of companies, private companies especially, that can dictate how you do business, how much you do business, where you do business. That's kind of the underlying ethos here. And that's important, especially when technology or with the internet as today is in this weird and probably hyper capitalistic compression pattern where a lot of businesses get acquired by other businesses and you're seeing a consolidation right now. If you were to look at in the United States who owns digital storage as a market share, it's 3 companies. It's Azure, it's Google, it's Amazon. That means if you start a business or a project today that relies on their hosting capabilities and you do something that's outside their terms and conditions, cannabis being could be one of them, and other topics, they could shut you off. They could just close your servers. They could increase your prices. So that is pretty stifling and pretty unfortunate that is a possibility and that could happen, especially when the internet itself was very accessible and open, and then now it's getting choked. And so blockchain technologies are a way to kind of get around this compression, this consolidation. Right now, you can, instead of having three players owned and everything, at least you have a decentralized net of players, perhaps 100 plus people, 100 plus companies, ideally, that are supporting an ecosystem. That's kind of the direction we you kind of think of at least blockchain in the storage sense. The other thing
Is
okay, go for it.
No, I was just going to make a counter argument to see how you would react. I think to your example of, let's say, big market players within the cloud storage system, right? The perk to the enterprise level, control and ownership is kind of that management of those systems. When it comes to the blockchain and UA, I don't know how familiar, in depth you are, and I'm sure not everyone who's going to be listening is, but when Alan's talking about this distributed network, and correct me if I'm wrong here, if it's changed, but it's effectively if all three of us individually are contributors to the system of the blockchain, then we individually are acting as kind of the neural network or that cloud storage system in itself, right? So is the failure point within that same mindset of having this distributed open market through crypto also potentially the kryptonite to it as well? Because if all of a sudden everyone stopped, turned their mining rigs off, because from a mining perspective, UA or whoever out there is listening, like that is why these miners are gifted crypto, is for upkeeping the network, or this distributed
Fun topic.
network.
Fun
So I'm
topic.
curious, like, if all of a sudden
I love
people
that.
didn't get bought in, or maybe are only bought into, let's say, Bitcoin, does all of a sudden this go away overnight?
Yeah. The chains are only as good as its user base.
Right.
And
Is that a good way to
at
explain it?
some point, that is a good way to explain it. And so your analogy or your example of what happens if users stop using it or not, and I would like to reframe it. What happens if there isn't enough adoption of the chain? And I think my blunt answer is without seeking outside capital, I think that chain is most likely going to die. It's the same, or to take a step back, the way
So does crypto have a
blockchain,
marketing problem?
it could market,
Is that their biggest blocker to
be a
being the
marketing,
next
yeah.
AI boom?
It could
Because
be
I feel like
marketing and
we've all been
actual
waiting for that.
delivery. Yeah. It's like a city. You pay your taxes, but what happens if you as a city who use taxes to support development, education, schools, infrastructure, what happens when your people start to leave your city? What happens when your city is getting less population over the years faster than you can recover your tax revenue so that you can cover these infrastructure services? The answer is your city is about to become a dead city. If you can't solve, if you as a city are not able to create enough infrastructure or value proposition for people to live there or build businesses there. That's kind of the short answer. You see that in the States, you see that in other countries, and so forth. In blockchain, the equivalent of a tax is we call it a gas fee or the fee you pay per transaction. Turns out that transaction fee or gas fee is actually a built-in economic model for that infrastructure that
Hmm. It's like a
ensures that
credit card
there's,
processing fee, effectively.
yeah. But instead of going to just Visa or just a credit card company, it's going to the chain itself to pay out or incentivize continued security development, continued governance, continued long-term other incentives. Basically, it's almost like a community pool or an HOA fee, one could call it,
Mm,
that
yeah.
incentivizes the continued development of these very boring topics. When I say boring, I don't mean, wow, don't pay attention. There are a lot of problems with technologies that at some point does not captivate your attention and you don't want to fix it, but they need to be fixed. Over the next, maybe in the first 5 years, everything is flashy. The 10th or 20th year, you're just going to be over it, or at least you as a business don't want to play in there. Or you realize you as a business can't make money off it. But there still needs to be some level of subsidy or economic fee to make sure the people who can maintain the technology, maintain the technology. Well, the gas fee also pays what you call validators. Validators are these services that confirm or review these transactions that get pasted onto a blockchain so that everyone has the same data set, right? Just imagine someone checking the answers. That's how a blockchain works on this idea that there are these validators that are checking the answers at a mathematical level. By the way, going back to an earlier comment, like what should people know? Do not go down the rabbit hole of learning how the technology works and trying to challenge the technology itself unless you yourself have a software or some level of academic credential to be doing that. Because I'm saying that because you're just going to get lost so fast.
Do you have favorite resources that we could share with people who want that, I don't know, 30,000 foot view?
The 30,000 foot view or the philosophical foot view is the Chris Dixon's Read, Write, Own book from A16Z,
Cool.
guys.
Okay.
That
Maybe we'll
one's
link
a
that
very
down.
good that gives a good philosophical why. As to the actual why, or technical why, or ground view, I'd say go to Twitter and good luck.
That's a black hole. Yeah, the reason why I ask is because I think I'm catching myself getting a little bit into the weeds here. You know, product and UA is probably the same way. I start wanting to scratch that itch and ask a million questions and, become a
Yeah,
knowledge expert on this topic. And it's I think most fun aspect of this is this notion of the unknown. Because I think there still is a lot of that tied to Web3 in general.
Yeah. Yeah.
But I don't want to necessarily get away from maybe what people are tapping into this conversation and getting your perspective on, which is what made you, let's say, decide to, or even more specifically, what should potentially be some of the avenues in which founders should be thinking about who are curious about building in Web3? What,
yeah,
starting out today, knowing what you know now, what would those areas of focus, like you kind of just mentioned, even some of the boring spaces, and a lot of times, at least within SaaS or other technological product solutions, sometimes the boring stuff is the stuff that makes the most money a lot of times, or things of that nature. So what would be kind of those focal points that you would think about? Is it another chain? Is it, something entirely different, or what's that solution that you might go after?
I think we all committed the sins and fallacy of getting too technical and too Web3. So let me reframe it and take a major step back into something that's more palpable. I think founders today, they're going to be asked the question, what do they want to build on or build with? And right now, the flashy, sexy toy right now is AI, right? They're going to see a lot of AI everywhere. Then what? A few years ago, and even right now, blockchain technologies, I'm sure, was a very hot commodity. And I'm sure 5, 10 years ago, we were shouting the words, oh my gosh, big data, big data, big data. I think you guys remember that. I think if you're a founder, there is a propensity to want to build things, and you should go build software or the things you want to. But you must balance it with what are you trying to do, or what are you trying to meet for yourself, at least in the short term. I would love to be able to build infinitely and not have to care about money or raising families or capital or any of that. But not every founder has the luxury of being able to build freely and even pay employees en masse, but not have to think about earning money, earning capital, earning enough so that there's no financial anxiety for either yourself or for your folks. So as a founder, I think the better way for me to phrase it or to direct them is either they themselves do it or they find someone who's good at it. How entrepreneurial and opportunistic can they be about earning enough capital or fundraising enough capital to meet their basic needs such that they can go then explore and build on all these technology types. Now, when we add it to Web3 or blockchains or crypto, whichever you want to call it, there's a uniqueness in this field in that there are more ways to sustain your business and earn income in the blockchain avenue that are not available to other industries, right? the way you can raise funds and the services you can build to some of the boring portfolio treasury strategies that you can do are ways that can solve the financial anxiety a founder may have. Right. I think a lot of founders who may build on Web3 might hope to come in when the token price is cheap, because if the token appreciates X or more in the next 2 years, the founder sees themselves as, my gosh, I'm retired. And you have to ask yourself as a founder, if that is your mentality, right? Choosing a project or any of that, were you really trying to build, or did you just have a short-term money problem?
Hmm. Well, there is an argument, at least with again, I don't know if this is directly tied to Web3 in general, but there is an argument to be had a lot of times when you're building at least a SaaS product to have an exit strategy. So
Yeah.
is the kind of story in which you're telling, in particular with crypto and how quickly you can make money, let's say, or you could call it volatility maybe, but if you launch a coin, all of a sudden it goes to the moon, be wary of that. Is that kind of what you're saying? Have
Yeah.
that longer term vision for what the future of the solution that you're building on top of these other technologies versus just looking for that quick payday.
Yes. Yeah. You should have a very long-term vision of what it is that you're building. Surprisingly, it's kind of weird to say to someone, you need to have a plan if the value of the token that you worked with 10x's, 50x's, or 100x's. And someone might argue, well, is it to retire? No, the answer is no, it's not to retire. You probably can't retire, actually. You need to be able to convert some of that crypto into capital, into cash for your business, so that you can continue to funding your operation. Hopefully, you don't turn out to be the guy that gets a lot of money and then deletes the company and becomes a Ponzi scheme slash a rug pull slash a
Sure.
scam artist.
Sure.
Or, as my favorite thing right now, or terrible thing, the target of a $5 rent attack. You don't want to be any of those people.
Mm.
Because the other thing about the Web3 industry is it talks a lot. It
Mm.
does. All on chain transactions are traceable, or not traceable in the sense that I can find you, but you can kind of tell activity wise. There's a reputation to uphold here.
What would be the areas then, since we've kind of highlighted the ones to stay, arguably, if you have that internal ethos to stay away from, what are some of the problem spaces that you would go after? Like, and I know about a
Yeah.
lot of the chain to chain solutions, data specific solutions that are not directly associated with a token itself.
I'd say the opportunities in this space are, where is the law gray, and where can a blockchain technology help add clarity to that, right? And other areas are, where are things inefficient, and where can a blockchain technology set empower it? For example, money transmission, at least in the United States, is done through bank wires where you pay a fee, $35 actually, maybe even 25, or you go through Western Union if you're going to, uh, let's say, another country. That right there, we call it I think it's called remunerations or remediations. Costs people a lot of money to send currency between countries, and a lot of time and a lot of uncertainty. I think if you send it to the Philippines, for example, it might eat into 50% to 60% of what you send. That right there is kind of, you have to ask the question, why is this so expensive? Isn't there ways to send money that's significantly cheaper? Now there is. It just doesn't. It's not marketed in mass, but we're building to that future through what you call
It makes a
wallets.
lot of
But then
sense.
it comes down to the next problem, which is when I say where the law is gray. How do you then convert cryptocurrencies into actual money you can use to pay your living? And what kind of business needs to exist? Licenses need to exist to facilitate that transaction, or at least that exit for folks that need the money to pay for bills, especially in different countries or here. So that's one targeted area, right, of opportunity. Another area of opportunity is, where can I guess, outside of direct cryptocurrencies, what else can blockchain technologies do, or what kind of business models can it enable that are significantly cheaper to do because we're using blockchain technologies. And I'll give everyone a short answer. It's just business models that are inherently complex, where you need multiple vendors and parties involved. That right there is ripe for a coordinating base blockchain software company to help manage, because
Something like
a lot of
logistics or something like shipping and logistics.
logistics could be one of it. Royalties management could be one of it. Anything that requires the passing of data, but for whatever reason, that industry or that those companies involve an independent intermediary, or they just need to collectively reduce the cost of that operation. That's an opportunity for blockchain. And I mentioned that because there are actually industries today, like media, entertainment, Hollywood, music, that rely on 1970s, 1980s Unix technologies, mainframe technologies that are outsourced to a company formed in 1992 that do the bare minimum, if not the bare minimum for 1992. This is 2025 now, that somehow facilitate these complex arrangements, but also hurt a lot of the folks that don't make enough. What do I mean by that? Okay, you ever ask, if you look up music models are fun. How come you need to make X amount of money to get a royalty payout? Right. So in music, I'll give it a hypothetical example. If you sign with a platform and all that, and you get enough play counts on their platform, and it generates, let's say, $100 worth of income for you, the artist, how come they won't pay you out until it's $10,000 or $100,000? Right? There's some arbitrary law calculation or ceiling, and the answer is it costs too much to pay you out,
Mm. The
because
processing fee
inherently
or whatever the
it's not the
underlying
processing.
add-ons.
There's a processing fee, but it's because there's so many companies involved in the
Uh,
calculation of the,
Because I got to pay
and
lawyers, I got to pay whoever distribute. Yeah, interesting.
it's actually worse. It's and like if you learn the different industry models, you'll know exactly like where the kink is. If you're an artist, you have a label or an agent, and then you have a music distributor, and then you have a music distributor that goes to a streaming service. There's so many companies involved before it actually
Hmm.
gets to you, that the time it took to and energy it takes to pay you out is more than how much they're paying you. And it's because it's
So what?
underpinned by very old technology types and
Yeah.
arrangements.
Blockchain's been out for over a decade now. What are we missing? Like that this feels ripe for disruption. Where's the missing link here that some founder out there hasn't tried to do this, or have they? And
Legality.
Okay, so
interesting.
regulations and
I mean, it
So
restrictions.
that
wasn't that long ago, everyone thought, wow, you can do dark web, place a hit on someone with on this thing. And all the way to, at some point, banks were shutting off access from crypto companies in the United States. It wasn't that long ago, but that's just 2 years ago, actually. Because of that uncertainty, it kind of stifled the adoption rate of it.
hmm. So that's one of the factors if you're a founder to the formula of success, let's call it, to think about if you're going to step into the space. And probably more so why it's important to not go it alone,
Yeah, great.
not to
Oh,
plug
yeah.
the podcast, but that's kind
Yeah,
of the
great
idea
lawyer.
here. Well, it's just like anything else. If you're solo, I keep using SaaS because that's what I know. But if you're a CTO who's has all the tech skills but doesn't have a lot of the business acumen, it's going to be hard. But the same notion. If you're stepping into crypto, I mean, it's still in some way, shape, and form even more so needed to have a core group of people that have the different skill sets that attribute to success, but also have the buy-in on the mission and the solution that
Yeah.
you're trying to solve for.
I'm just gonna say, if you're a founder that's interested into Web3 or blockchain technology, just know that it's much more challenging, and all the more reason to not be alone in this space, just because of the pacing of both regulatory and technology innovation that comes with this industry. It's also uniquely an industry that is inherently built on the internet that can reach the entire planet. So if you're building a product to service a planet, you have a planet worth of problems now, don't you? Uh, That said, there's a big payoff. There are a lot of payoffs along the way. Just know that those who are interested in it is just you're walking into almost like a flooding, and you need a team, or at least folks that you can rely on. If you're alone in this space, well, here's the problem. You have to know crypto and blockchain really well. You also need to know regular business decently enough. Just because it's a crypto business does not mean it's not a business. Right? You still got all the things you must do for regular business. In many ways, it might be easier to start elsewhere. But then again, it depends on the individual, depends on the team, depends what opportunities they see. And because even though it's harder, there's also a lot more support and literature. Everyone's trying to figure it out together here.
So now we're talking on, it's important to not go at this journey alone, especially for Web3 founders. So what would make up a really strong founding team?
You read my mind.
I love
I was going to say
you know,
you sounded like you're a basketball fan, so my question was, what's your starting five, or basically
yeah,
exact same
honestly, I
question.
actually love that question. Honestly, if you're a founder, you need, I guess a dream team would be, you need absolutely, there's still a need for a CTO like person who is building, right? The builder person. And then you also need, and it also now becomes depending on what product you make, but not only do you need a CTO, you need your standard issue product manager or founder. From there, you can deviate and ask if you need someone to help you with legal, either with partnership, legal, all that kind of stuff, whether it's navigating the market versus attracting deals or working with institutions or B2B,
Mhm.
or trying to figure out how do you structure your product so you're not classified incorrectly. There's a lot of, there's a significantly larger legal cost in Web3 companies than a non-Web3. I would consider having this person to be a core or close to core if you can. If your product is community driven, meaning you rely on community values, community ethos, a lot of people in these niches, then in your starting lab, you should have a community person then. Engagement, community, we call it marketing if you want, doesn't matter. The next two can be up for grabs. It can be more engineers, it could be operators, right? There's a lot of things you can get by in a founding team. I don't really think you need a direct accounting team or finance team at all in the beginning. You don't. I think that can be pressured to whoever the CEO is. You just need a CTO, product manager, and if you're building community product, a community person. If you're building a B2B product, a legal partnership person, and build from there. It's different from a regular SaaS company from maybe 5 or 10 years ago, where you could have gone by with a product manager and 4 engineers. And this is actually an area where you can get if you do a CEO and 4 engineers, you still run a lot of risk because of both regulatory and B2B partnerships, as well as you run a lot of risk of quite literally building the wrong product because you're not engaged with the community or you don't know what the community is actually looking for. Or depends which avenue there.
Do you see any common hurdles that the past founders you've worked in or that it's very common for founders to run into in this industry? Okay, other than the legality, regulation.
No, it's sometimes they make decisions that have such technical debt. Like they chose a chain that, wow, this chain is actually pretty hot. Like they're building on the chain and the direction of the chain is not favorable to the development of the product. To put it differently, I expected the roads to be a certain way and then they changed it, or they no longer support it, or they killed it. That could be a very big issue right there. Or, hey, I built in this chain because it gave me such incentive, but then over the next 3 years, this chain has gone nowhere or has had no adoption or hasn't bothered to grow. It's almost like you built a business in a city of which the city itself decided is shrinking and isn't able to interact with other cities. That is actually, you have basically a third party platform risk. You literally have a platform risk, surprise, ironically, in the Web3 space.
Yeah.
And your choice now is, do I build on that chain, continue it, or do I just go to another chain? The good news here is you can easily go to another chain. Well, I'd not say easily. It's like a click of a button. It's not. But you can cease building on one chain and just pick up shop and go to another chain.
Hmm.
The barrier to move is a lot easier than in other domain areas. So that is an inherent issue. So every founding team is basically, when you make a bet, you're making a bet that the technology itself is still workable for you and that the economics are variable. And when you realize that the platform that you built on is not actually supportive to your long-term vision, you actually do have a choice to move to another chain, which means not all is lost. This is common, actually. This is common enough. In terms of other issues that aren't common, be careful what country you are trying to do business with is very, very important, because now that you have all countries on the planet available to you, it doesn't mean that you should go to every single country. In fact, I can give you there's a list of countries that you should probably just avoid,
Yeah,
because you
maybe
don't want to
we
get.
can list that in the description.
And I say avoid not in the sense that it's a bad market. It's just that you don't want to be caught in with the tax or burden of whatever it is. You want to be focused on building your product or attracting users. The last thing I could comment that is probably important for them is, yeah, I hope you have a really good attorney or lawyer. Mostly because I'm sure there'll be folks that would like to seek investment from, people you like to partner with, and those initial agreements can be a make or break for you. You could be straddled with something you don't want.
So you've talked about your dream team. You've talked in a certain way what the recipe for success or things to avoid, which is great, because I think as a founder, you're always trying to make sure that you're avoiding the same path that someone has come before you, so you don't hit every single one of the speed bumps. And I think you, in some ways, alluded to where my next question is going to go, which I am the most curious about, and I think anyone who might be shifting or thinking about launching within the Web3 spaces is interested in wanting to hear your 2 cents is, how do you find your first user? Is it purely just lots of marketing and hitting launch and then all of a sudden you sit there and wait? Or is it dependent, I guess, maybe on the solution and what you're trying to roll out? I'm curious, how do you go about finding your first users within a crypto space?
I want to say, just because it's crypto, it doesn't mean it changes the business model or marketing that you must do. If you're a B2B business, then your first user is another business. That means you either have an SDR or a sales team or a partnership team, or you yourself as a founder are very good at making deals and relationships to build something before it gets built, or to offer them something. What if it's a retail product where you're going to have just mass market users? I mean, I guess you have to do whatever online marketing campaign is possible. Even though search engine optimizations are dead, no one does SEO. There's still Twitter or Blue Sky or other niche communities. You can find users that way. I mean, it kind of depends on what the business model of the business you're building is, right? If you are a B2B business and you're doing Twitter ads, that's kind of, I don't think that would serve them as well, as opposed to going to specific areas and sending your deal maker and meeting the businesses that want to be it. The other thing is, you don't want to fall into this trap of building a solution and then trying to find a problem.
Mm-hmm. Mm-hmm.
As a founder, as a product person,
Speak to that really
yeah,
quickly, like why you should avoid that.
you don't want to spend your life, your energy, your money to build a solution nobody cared for. You could shortcut this by quite literally asking various businesses, people you know, people you don't know, and when you see on the market, hey, what are your problems that you need, and what can I build to help you solve those problems? And it turns out if you have maybe 5 people, 10 people, or 25 people saying the same problem, maybe you need to solve that problem and give it a try. And in many ways, once you have validated or at least have secured what kind of problems that need to be solved, you can then build your solution to be,
And some of those people might be your first customers.
it might be your investors actually. And there's actually a possibility that folks would invest into building the product that you pitch if you've heard and understood what their problem are, and also validated with other customers, potential customers, you can basically secure funding before you actually build or at least complete a product. You should build some kind of product, or at least build some kind of base of a product. You should absolutely do that, because if you built something, a solution that nobody wanted, you know how much energy it takes to go from building a solution to building something else completely? The answer is 100%. You do it all again. We could just skip that part, you know.
Mm-hmm.
Uh, so very important.
I
I think
appreciate that.
a core takeaway, at least, I think the first 90% of our chat today was very in the weeds of Web3. I think if we take a step back, really the core word here is Just because it's a flashy technology name like blockchain or AI, it doesn't mean you depart from the fundamentals of what you should do as a founder or what you do as a business operator.
Mhm.
You're running a business, you're finding problems, you're solving those problems. What's your business model? How do these technology types enable that business model? Those are your core things. I'd say the technology is maybe just a flashy. It's actually itself a short-term advantage. Technology is a short-term moat for your business, but it's not going to be. It can't be your only part of your business because technology is easily obsoleted, or the competition can just outdo you. You
Mm.
have to think beyond technology.
How early do you think we are in blockchain if you compare it to, let's say, the internet?
2 years after dot-com bubble burst. That's where we're at. That's my direct answer. Using 21 and 22 as a dot-com bubble burst.
Hmm.
Yeah, we're 2 years after that. So that puts us at 2002 to 2004.
So
Might be even going faster.
interesting. We're really in like early stages of
Yeah.
this. Blockchain, NFT, they could be a thing of the past in the next couple of years. Maybe they
They're
won't.
just
Maybe we could dig into that, but
technology. They're just
yeah,
a technology that we're now going to start to white label or build experiences on top of that. You're like, I didn't realize it was that. Perfect by the here's a great question. What a perfect use case of blockchain is that you did not know it was happening.
that's fair.
I actually don't. It's an infrastructure technology. I don't believe that people need to know that this product is powered by the blockchain technologies or any of that. That is a non-starter or non-marketing factor for attracting retail customers or businesses. All they care that it works, right? That it's a very invisible product. The way you log in with your email today, there's so many underlying services of authentication that you don't even know they happen, but it
That's
happens.
fair.
That's the way I view blockchain technologies.
Yeah, that's fair. I mean, in and of itself, and maybe this is an incorrect perception of blockchain in that every system is distributed in some facet. Does that inherently mean that there's no such thing as bootstrapping within Web3? Do you
What do you mean?
always
Like self-funding
Yeah,
and
because the
kind of
cost
get
association is so high, um, that you need to go out and fundraise in order to create a solution? Or are there
Uh,
pre-existing, like,
uh,
services that feed that need as a solution also?
Great question. So let me introduce a tactical nuance, which is going to demystify it. If your goal as a founder was, I wanted to build my own blockchain, the answer is you're going to need a lot of capital, more capital than your eyes can see. Don't recommend that. Now, if your goal is to build a product on top of a chain, just use existing
Okay.
chain
Really great.
technology rails,
Yeah.
you will find a lot of potential for funding and significantly lower barriers to start your product, your project, your business. You can very well make very cheap products on any blockchain because the beauty about blockchain is if you build it, if it's the right chain for you and you build a very nimble solution, there isn't any hosting cost for you. You're using the chain.
Interesting.
You're using the chain out there. You're just building smart contracts and making it work. Yeah, very minimal. So there's a lot of sticky traction there. A lot of chains are also infancy states that they incentivize developer funds, aka if they like what you're building, they'll cut you a grant or an investment to help support your business. Now, that's only on the newer chains. Going back to your question, what's the startup cost for a team going into Web3? I could argue you could actually pull it off with only salary costs and
okay.
very minimal, maybe a computer and internet and all
Okay.
that, and maybe travel, right?
So
You
it
can get
depends.
enough traction to bootstrap it. Hell, if you cut salary and it's just yourself, you can still do it.
Mm, yeah.
It just at some point you just realize there's a lot.
Yeah, just because when you're building something, right? We've talked about this several times with different people, you and I, as to how do you decide whether it's time to bootstrap or continue bootstrapping or raise funding? And I think for a lot of people, there's probably this notion that there's just again what's awesome about this conversation is we're pulling back the curtain and now we can
Yeah.
see some of the inner workings of the system, and it's not as scary and overcomplicated as I thought it was going into this
Yeah.
conversation. Do you feel the same way?
Oh yeah.
For sure. Like, I feel like I have a much better understanding, but I feel like you've made it, Alex, accessible for founders. Like, I feel like more people should be. Look, like, if we're in 2004 in the internet stage, we need more founders, okay? Because, like,
I'm
Instagram
just a
didn't exist
finance
then.
guy, guys, but I can tell you the numbers are pretty decent for a starting founder to be on where they want to build a business, and the barrier entry is a lot cheaper. The barrier entry for a founder today to build on a blockchain is a lot easier and cheaper than other platforms and softwares, relatively speaking.
AI in particular is just insanely expensive a lot of times.
Okay, AI is fun. And this like maybe this is the divergence here, but AI is fun because I expect extremely high compute costs for all players and years later, but right now it's significantly subsidized. That means if you build on AI today, your risk is, again, platform risk, which is either the model that you're using or the model that you sourced it from, licenses from, uh, doesn't work anymore, or they've changed the rules of engagement, or it costs much more, to where you host the AI and the compute costs. So in many ways, if you look at it now, it's a temporary subsidy for people founders to build on it or use it, and then in about maybe a few years, they can get all eliminated collectively unless they had enough capital to escape it. And that's kind of how I look at it. I'm looking at so many AI wrappers, so many models, and then you're also in an area where if you join today and then OpenAI drops a new model, well, shit. What do we do? Do we
Hmm.
retailer the product here? It's a fun gambit. That said, AI is definitely a powerhouse productivity tool
Hmm.
for those bootstrapping their own company today. That is something that every founder should absolutely explore and create their own custom GPT model, even their own legal person GPT to help them through things. You can definitely, whoever the founding team of your founder team of a company is, they can be 10x, 25x if they have the right AI GPTs shared amongst each other.
That's a common theme that we're seeing with a lot of founding teams right now is that use AI, but you
Yeah,
can
and increase the
build
hell
on
out of it.
blockchain. Yeah.
It's the internet, but kind of better and so much faster. I mean, it's very useful, especially when you know how to train it.
Mhm.
Becomes more useful because I think the internet just gets faster these days.
Hmm.
And just so much more information that at some point you need a system to be able to constantly sift through that information.
Hmm.
I, as a human, cannot keep up. It's just a lot.
Yeah. Do you see AI as a competitor to blockchain or Web3 in general?
Now,
If
I
not,
see
like,
AI
are
as
there any competitors?
if you look at AI, what does AI need? Place to store it, computing costs, and at some point, AI is just systems talking to systems, and they have to negotiate and settle data sets with each other to figure out whose data is more correct and who owns the data is the other part.
And not
All that
necessarily any more
inherently,
secure than it was before.
yeah, it's just data sets, massive data sets talking to massive data sets at a speed that a human cannot even keep up to pace with. Inherently, that is different from what blockchain technologies solve or compete in. Sorry, AI is different from blockchain. AI needs, in many ways, some of the elements that blockchain technologies enable. Could be decentralized storage, decentralized computing. It could be data settlement, data ownership, because blockchains just enabled systemized data sets that an AI can go and retrieve and use. That's effectively what it can be. I don't think one makes the other obsolete. I think both of them are more married together than they realize. And that world is going to be very fun. I think right now we're seeing the reintroduction of decentralized infrastructure, decentralized computing, blah, 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 decentralized. And it's because as great as AI is, where do you host the AI? And who has the compute power to afford? There was a moment in like 21, 22 when we had the shortage of GPUs and
Hmm.
chips that the only people buying chips are either Bitcoin miners or
Hmm.
large institutional companies, Amazon.
Hmm.
That's kind of an interesting point. Imagine the entire AI industry is propped up by two people who bought all the hardware components on the planet. That's risky.
Elon to build his supercomputer?
I mean, yeah. It's why I'm a very big proponent of decentralization as well,
Mhm.
which at least I'd rather know that there were 10 to 20 players, not 3 players or 1 player. Natural competition, I suppose.
All right. So, Alan, I want to know, what legacy do you want to leave behind as we wrap up here?
A legacy I leave behind. Okay. I'm gonna go with, in the context of this conversation and what I'm trying to achieve this year, I hope that people are not afraid of the uncertainty that's coming, that comes with technology or comes with political turmoil. And instead they shift that fear and uncertainty to what are the possibilities and the opportunities that they can build or snipe. I'm very much a believer that one door closes, one door open kind of energy. When there's a disruptive technology, yes, some things go away, but also, yes, new things are equally created, if not more important things are created. The question becomes, what is the opportunity for that? Any new technology? What's the opportunity here? I remember AI causing fear. So the next question is, okay, if you look at technology not from a position of fear, but from a position of being an opportunist. What do you see? What can we be doing? Because both can exist. Like, you can be fearful. Okay. And then what? You have to tamper that brain, and that brain is correct probably on the fear side, but then also increase the opportunity lens and see what can you see. And if you're not able to see that, my defining statement is find some curiosity from other friends.
Such a great mindset for a founder to have, or a lens. You know, both can be true at the same time. You can see the craziness that's going on around you, but also have like that stoic nature to keep trudging forward and finding those new opportunities through that curiosity at the same time.
You know how much of a stoic you have to be when you're in financials
Sure.
and working with
Sure.
people? The answer is, you know how many times I get a message that says, "Oh my god, the market is down," and I just say, doesn't really
Right.
matter," and
Right.
like they elicit a reaction. You have to be a stoic because if you zoom out enough, it doesn't matter. Like, maybe on that day it crashed, in that week it was up, in that month it crashed, in that quarter it was up, in that 6 month it crashed, in the last 5 years it's up. If you just keep zooming out,
Yeah.
things are fine, at least in terms of volatility.
So, my final question, and I want to preface this with what I've been so impressed by with your career, your trajectory, where you're moving next is this ability to, I mean, whether it is or whether it's not, like seemingly spot mega trends and jump on and leverage your experience. So we mentioned AI before. We've been talking about blockchain Web3. Like, what is the next big mega trend? Like, if you can look into your crystal ball, like what's getting you really excited? It could be something within Web3 that we don't know about, or that is like still within that infancy stage. Yeah, I want to know.
My goodness. Oh my god. I cannot predict the future, y'all, but I'll give it a shot. Big mega trend. I am because of you can't answer a mega trend without getting understanding and recognizing the politics of it. I believe the biggest mega trend is crypto becoming American. And as a byproduct of that statement, crypto becoming American is that in an age where a lot of countries are very hostile to crypto, you're going to see this entire financial industry, financial technology type get modernized and greenlit to an American standard and a US point of view, which means crypto itself, all the currencies that you see, all the token is supported or underpinned by US dollars, which means cryptocurrencies are a soft extension to the US dollar. If you are in another country or you want to do business in another country, you can either secure funding via crypto and then, which is an extension of US dollars, or if you don't have faith in your government's ability to maintain banks, you just park your money in crypto slash like the US dollar. This is, in my opinion, a mega trend that's in flight now because it meets not only the current administration agenda, it also meets the massive heyday that stable coins, which are currencies that are pegged to the US dollar. Notice that I said US dollar. I don't even, a stable coin is a fiat to current crypto one-to-one relationship. Exchange this token, get that $1. I say dollar because I've never heard of a euro version or an Asian currency version or anything else. And they're not being friendly to them either. Stable coins are having a heyday where you're gonna see perhaps an IPO, perhaps maybe public launches.
Wow.
And what does that actually mean? It means American economy is very private economy, market economy based, meaning a lot of private businesses get spawned by private investors funding private ventures. That's it. Now you can have that on a global scale. You can be some person or some business that gets privately funded through private dollars. This meets the other mega trend, which is in the last 20 years, we've had the most increase in venture capital and family office than ever. From an era from maybe 50 years ago, we may have had maybe less than 100. Now we have over 20,000.
Wow.
If not,
So it's
and
a
it's
good time
growing
to
out,
become a founder, is what you're saying,
right? There's
and
a lot of
focus in crypto.
private investment. And if you think about it, a lot of private, like Silicon Valley, especially in the first 20 years, 30 years, was very prominent because a lot of capital happened to be there in the United States. You invest in US companies because the US company has pretty good safety, for lack of a better word, on its capital and investor rights. And now you're kind of seeing a big experiment on, okay, well, what happens if you give a bunch of people access to the US economy so easily? What happens? That's truly the big question here. And so you're going to see a lot of financial experiments. You're going to see a lot of where do people in other countries park their money. I just learned the other day, by the way, that in China, a lot of Chinese people who have earned their wealth park their money in real estate, and it's because it's one of the back then, at least until the bubble of this year, it was the only thing you really could park your money in. I also live in a city in California where a lot of the units here are owned by foreign investors from China.
Yeah, same
Yeah,
here in New York City.
in New York City, right? Maybe in Vancouver, and you have to ask. Instead of looking at it with a fearful lens, ask why do they do that? It's because literally in their own market, they don't have access to anything secure to park capital in. And so they think a house is the best thing that is the best. And for the last 30 years, that's actually been a true statement until the collapse of, was it Evergreen over there, which is another company. So now you have a lot of capital that either got evaporated or diminished or removed, which is that's the opposite of what the American economy or crypto economy does, right? So then you're going to see a lot of folks who have amassed wealth. All right, I guess we park it in crypto. I guess we park it in US dollars for now. And then we see what happens. That's kind of the big mega trend. If we want to go even more big of a mega trend, that's a great question. Good luck to everybody involved.
Sure.
I'm
Yeah,
sure
you'll probably make $1 billion if you can figure it out.
I'm sure decentralized computing might have a heyday somewhere in here. I'm sure of it. Just kidding. I mean, computing is important, but we don't know what else happens.
Sure.
That's it.
No, I
So
like that.
that's my big bet.
It seems like it's a good time for folks who have been Web3 curious to start digging their heels in and figuring it out and find that solution, which is exciting. So I appreciate that.
Fintech. If you want to be a fintech founder, I guess Web3 is a pretty good entryway into that right now.
Very cool.
Awesome.
Boring. I like to look at blockchain as a very boring technology that's going to operate invisibly. You
That
just won't know
sounds
what happened.
beautiful, actually. Like invisible.
Why do I so for the audience that's wondering why do I keep saying boring? It's because I've also a believer that boring problems are where you find the most opportunity to be an entrepreneur because no one else is thinking about the boring problem or no one else wants to solve the boring problem. There's nothing sexy about it. That
Other than
means
that
no one
cash.
else yeah, no one else is solving it. I like to always use like, waste management. WM is a company here, and they solve a very boring problem. Trash disposal that you don't want to do, that you'd pay someone else to do for you, actually. That's an area opportunity. And that's how I kind of see a lot of blockchain technologies in its future. What are the most boring things and how can we just eliminate it altogether so that the end consumer doesn't have to think about it. Right. That's my spiel.
Thank you so much, Alan, for chatting with us today. We
Thank you, John
thoroughly
Newegg.
enjoyed this conversation, and we'll link, all of the links and any resources that you want to share with our audience below for sure.
Oh yeah, there was a question very earlier, like I mentioned, like how did I get started? The answer is I got started shit posting on LinkedIn, and also I started a newsletter from 22, 21, and I've still been doing that ever since. I didn't stop.
What's the
So
name of the newsletter? We'll make sure to link it in the description as well.
it's myname.com. So it's Alan hyphen.
Awesome.
Yeah. Have a wonderful day. This was fun.
Thank you.
Awesome. Thanks, Alan.